Hi, and thanks for watching. This video shows accountants and business managers how to work with value-added tax, VAT, in Dynamics 365 for financials. We'll see how to comply with local VAT regulations and how to prepare to report value-added tax. Local requirements affect how we work with VAT, so we'll focus on the concepts that typically apply. The scenarios we'll look at are setting up VAT, working with VAT on sales and purchase documents, preparing to report and settle VAT. After we migrate business data to financials, one of the first things we must do is set up VAT. If we're liable for VAT, most of our transactions will have it, so it's important that we set up VAT right away. To help us, Financials provides a Setup VAT Assisted Setup Guide in the Business Manager and Accountant Role Centers. Let's get started with the guide. We'll choose where we do business and the kind of business we do. We'll choose the kinds of items and services we deal with and the applicable VAT rates. Now we'll choose the GL accounts for sales and purchase VAT. If we're required by local regulations to explain the use of non-standard VAT rates, we can enter text that will be printed on sales document. We'll also specify default VAT rates for the templates we use to create new items, customers, and vendors. And that's it. To verify our setup, we'll finish up and search for VAT posting setup. Here's a tip. If we account for VAT only when we apply a payment to an invoice, that's easy to do. Here are the steps. Open General Ledger Setup and choose Unrealized VAT on the General Fast tab. Then, open a VAT posting setup. Choose an option in the Unrealized VAT type field and fill in Sales, Purchase, and Reverse Charge Unrealized VAT accounts for types of business and the VAT rates they apply to. Correctly calculating VAT on sales and purchase documents is the key to fast and easy VAT reporting. To ensure that, we'll use customer, vendor, and item templates when creating them. Two things determine the VAT rate on documents: the VAT business posting group from customer or vendor on document headers, and the VAT product posting group on document lines. We combine these on the VAT posting setup page to determine whether to charge VAT, the rate to use, the type to apply, and where to record it in the GL. We calculate VAT on our own sales documents. That's easy. However, calculating VAT on purchases is a little tricky because our amount needs to match amounts from our vendors. Let's open a purchase invoice to see how to handle VAT. The VAT product posting group shows the VAT rate that will be applied. Below the lines, we can see the total amount of VAT. For multiple VAT rates, we can view details per rate by choosing Statistics. To match VAT on our vendor's purchase invoice, we'll adjust the value in the VAT amount field. To change VAT amounts, we need to choose Allow VAT Difference on the Purchase and Payables Setup page. On the General Ledger Setup page, we need to enter a value in Max VAT Difference Allowed field. After we post VAT transactions in the period, we can prepare our VAT return. Let's look at the steps. On the User Setup page, in the Allow Posting From and To fields, we'll enter dates after the period we're closing, which prevents people from posting new transactions to the period we are closing. This way, only we, or our accountant, can make changes to the period we are closing. We'll verify that our VAT statement reconciles with our GL. We'll preview the VAT statement for the period we're preparing a VAT return for. When we receive confirmation from our tax authority on VAT due, we'll run the Calculate and Post VAT Settlement Report to settle VAT and close VAT for specified period. VAT claims, like vendor invoices that arrive after we close VAT periods, can be reported in the next period by setting the Include VAT Entries filter to Before and Within period or through your final VAT return. Thanks again for watching this video about working with VAT in financials. We've seen how financials helps us manage, track, and record VAT consistently, so our non-accounting staff can focus on our business and not on VAT regulations. Helps us easily handle exceptions in VAT transactions. Helps us report and settle VAT with our tax authority.